Hi CMA students, and we are into the third lecture in practice relating to MCQ questions. Yes, we are practicing paper 7 direct taxes for CMA Inter. I know there is a lot of fear regarding MCQ questions, how it would be, will we be able to face it well, will it be tough? But don't worry, we are with you. Let us practice a lot so that we can crack whatever type of question comes. Not only these MCQs, but I will be giving you different MCQs, how it can be asked. So just take a notebook, write down each and every important point which I will be sharing, and try to give your own answers along with the discussion so that you can check whether your answer is right. Are you thinking in the right direction or not? Don't be just a passive spectator or an audience, be an active participant. Are you ready? Yes, let's get started. So, what is the question number 51 talking about? It talks about Mr. Lakshman, right? It talks about what? Mr. Lakshman. 1 minute, I will be improving the quality. Yes. Now it is talking about Mr. Lakshman. What Mr. Lakshman did, he has occupied a apartment till December 2015. So this question is relating to 15-16. No problem, what's there in it? He self-occupied it, right? Till December. It was his own property. So he occupied. What's wrong in it? No problem, right? And then he occupied the quarters. Quarters means some place given by the employer, right? Some flat given by the employer, provided by the employer. The apartment of Mr. Lakshman was let out for rupees 20,000. So the actual rent received was 20,000 per month. So till December, Lakshman was staying in the house, and after December, it was let out for 20,000. That means in our financial year, January, February, March, 3 months, 20,000. So at 60,000 rent, it was let out. From 1st January, it was let out. Correct. The annual value of the property would be. This is a wonderful question. You will be shocked to see the answer. Yes, at the first instance, you will say, sir, 20,000 per month into 3 months. So 60,000 is the answer. It's a trap. So now listen carefully what is the right answer. Now what happens? Generally what we do is, if the property is partly let out, that means January, February, March, it is let out in this question. And partly self-occupied, that means from April to December, it is self-occupied. In that case, the law treats the property as let out. The law will ignore that it is self-occupied. Clear with this provision? When we solved the long problems in the class, we did this or not? Yes, we did this. Now what's special about it, sir? The speciality will come now. Listen carefully. Now what happens is, to compute GAV, what we take? Municipal value, that means municipal rental value, or fair rent, whichever is higher. Step 1 in computing GAV. Municipal rental value or fair rent, whichever is higher. Step 2, whatever result of step 1, or standard rent, whichever is lower. Then we will get reasonable expected rent as per CMA textbook. Then we will come to step 3, that reasonable expected rent or actual rent, whichever is higher, we will take. This is how we calculate GAV. But the point is, when part of the period it is let out, part of the period it is self-occupied, we'll deem it to be let out throughout the year. So we have to apply all the three steps. Do we have municipal rent? The answer is no. We don't have municipal rent. Do we have fair rent? When we see the question, we feel no fair rent is not given. But the answer is, if you are thinking this way, it is wrong. The actual rent given will be treated as fair rent. The actual rent given will be treated as fair rent. So 20,000 per month, actual rent given. Fair rent should be taken for how many months? Yes, 12 months. Because the law deems that there is no self-occupied period. Right? So fair rent would be rent given in the question 20,000 into 12 months. That means 2,40,000. Now as per step 1. Municipal rent we did not have. Fair rent we have 2,40,000. So whichever is higher, obviously 2,40,000. Step 2. You will compare step 1 answer 2,40,000 with the standard rent not given. Right? So step 2 will not apply at all. When standard rent is not given, we don't consider step 2. So ignore that. Now what is reasonable expected rent? 2,40,000. Compare that 2,40,000 with actual rent 60,000. Tell me whichever is higher. 2,40,000. So what is gross annual value? 2,40,000. Now you understood what is the answer in this question? Yes, the annual value of the property is 2,40,000. Now generally in any question, if they give annual value, believe that it is net annual value. But in this question, because we don't have proper information to calculate the net annual value, because we don't have municipal tax, so we'll believe that annual value means gross annual value. Generally annual value means net annual value. Here because the ample data is not given, so we will believe that gross annual value is expected in this question. Okay, they should have specifically asked what is gross annual value, but did not ask. We can't do anything. Again, for clarifying you, I am telling that when the property is partly self-occupied, partly let out, deem that there is no self-occupied portion. And when we have to calculate fair rent, the actual rent will be used as fair rent, and fair rent will be calculated for 12 months. That's why 20,000 into 12, 2,40,000 was the fair rent. Fair rent is compared with actual rent for January, February, March 60,000. So 2,40,000 or 60, whichever is higher, 2,40,000 is the gross annual value. So many things are there in this question to think. So prepare house property very well. Oh, further more tough question. But don't worry, this is super easy, we'll do it fast. Okay. When a company is there, they paid how much? 5 lakhs rupees. They paid how much? 5 lakhs rupees. To whom? IIT. And whenever you contribute to IIT for scientific research, how much deduction? 150%. Hey, if we contribute to IIT, if we contribute to national laboratory or to an approved university for approved program, in these three situations what we discussed, come on, again I am repeating for all of you. If we contribute to IIT, if we contribute to national laboratory or to an approved university for scientific research in approved programs, then 150% deduction is given. So here they contributed 5 lakhs, 150% of 5 lakhs, yes, 7,50,000. So what is the right answer? D is the right answer. Wonderful. Good. One more small thing which I will ask about. Here they talk about unrelated area. Right? For the business it is unrelated. Now whenever we contribute, whether we are donating to related area, unrelated area, it is immaterial. If you are doing scientific research in your in-house business, then it should be related. But when you are donating, relationship with your business is immaterial. Okay, so they will try to confuse like this, but don't worry, we are here to help you out. Okay, chalo. So in our classes we discussed it in more details, right? Now come to the next question, 53rd question, right? Mr. A has loss from regular business. See, loss is from regular business, correct? Loss is from regular business. How much? 8 lakhs. And income is from speculative business. How much? 11 lakhs. Very good. And loss from regular business can be deducted from income from speculative business. Right? This is not wrong. We can deduct. Right? So, what is the total income? 11 lakhs is your profit from speculative business. From that you are allowed to deduct anyhow loss from regular business. So 8 lakhs deducted and 3 lakhs is your right answer. 3 lakhs is your total income. So what is the option 3 lakhs? Yes, option A is the right. If it would have been exactly opposite, they would have said that loss is from speculative business. So loss from speculative business cannot be deducted. But loss from regular business can be deducted if there is an income from speculative business. So speculative income minus regular loss is right. Okay, it can be done. That's why 11 lakhs minus 8 lakhs we did. Option A 3 lakhs is the right answer. Come to 54th question. AOP, Association of Persons. The word itself tells, right? Association of Persons. So here in this, who are included? Individual, HUF, company, partnership, all can come together. That's why we call it as Association of Persons. Now means what? Means individuals only. Wrong answer. Means persons other than individuals. No, wrong answer, because even individual is included in AOP. Individuals and HUF only. Of course, corporates are also included. So how can we say that? So that's why none of the above is the right answer. Right? Association of persons include individual, HUF, company, all come together. Like you see many gym clubs where corporate memberships are there, individual memberships are there. They are AOPs. Suppose similarly they would have asked, okay, what is the answer? None of the above. Because association of persons include individual, HUF, company, partnership, local authority, all can be coming together in associations. Okay, so that's why option A, B, C are wrong. So D is the right answer. Okay, but suppose in the question they ask you, what is body of individuals? Tell me. Ramesh, Ganesh, Naresh, 3 come together, we call it as body of individuals. Here only human beings are there. Okay? Right. So in body of individuals, companies will not come. Body of individuals only, individuals will come. Sita, Geeta, Meeta, Sushma, all will come. Don't worry. Right. Body of individuals. So all human beings, men, women, all come together. Okay. Question number 55. Income tax, right? Indian companies where place of effective management is outside India, right? Shall be. Is it resident, non-resident is the question. Always remember, if it is Indian company, it is always resident. Place of effective management is considered for foreign companies. Those companies registered outside India, for that companies we check POEM, place of effective management. Indian company, if it is registered in India, yes, registered under section 2 subsection 20 of Companies Act, or incorporated by the Parliament of India or state legislature of India, all are Indian companies, and if it is Indian company, it is a resident of India. If a company is registered in India by parliamentary law, by state legislature, or under Companies Act, then it is a resident in India. Okay. We don't check POEM rules, right? Where we check place of management, effective management rules only if a company is registered outside India. Suppose in the question I will ask you one more question. Tell me, place of effective management rules are applicable to A. Indian company, B. Foreign company. What is your answer? Yes, for foreign companies. Okay, come on. Next, go to the next question. Casual incomes received by the assessee. Casual income, is it exempt? They are fully taxable. Okay, casual incomes are winnings from lottery, winnings from crossword puzzles, winnings from lottery, winnings from crossword puzzles, winnings from card games, winnings from betting on horse races. All are casual incomes, which I said, and they are fully taxable, and that too at MMR, maximum marginal rate, that is 30%. Okay, right. So what is the option? Fully taxable, C. Okay, good. Come to the next question, 57th question. We have to rush fast. Okay, free meals. Free meals worth rupees 120 are provided. Yes, 120 rupees per meal. To how many employees? Okay, how many days? 200 days it is provided. By whom? By the employer. During working at which place? At a remote location. So if it is offshore sites or if it is remote site, free meals is fully exempt. Yes, it is fully exempt. If it is remote area, offshore oil explorations, then it is free meals is fully exempt. Related question I will ask. If the same question they would have said that free meals are provided at office and it is worth 120 rupees. Then if it is at office, we will deduct 50 rupees per meal and 70 per meal would be taxable. Okay. If it is at office, 50 will be deducted, 120 rupees cost of meal, 50 is the exemption, so 70 is taxable per meal if it is normally at office. But if it is at offshore oil field or if it is at remote area or tribal area, right, then free meal is fully exempt. Come to the next question, 58th question. What they say? Unrealized rent of a property shall be excluded from. Generally, unrealized rent we deduct from actual rent, right? Annual rent we take, from that we deduct unrealized rent. I will repeat for you. When we compute GAV, how many steps? 3 steps. First step, what is it? Come on, remember with me. First step, municipal rent or fair rent, whichever is higher. Then compare step 1 with standard rent, whichever is lower. We call it as reasonable expected rent. Okay, then we'll compare that with annual rent, whichever is higher we take. When we take that annual rent, from that we deduct unrealized rent. Okay, so that's why what is the right answer here? They did not give annual rent exactly, so we'll take gross annual value. Because after doing that step 3 only we get GAV, right? So we'll consider it as gross annual value is the right answer, option A. Now what is unrealized rent? We had the tenant, he enjoyed the property, but he vacated without paying rent. We tried to recover but was not possible. We failed to recover the rent. Okay. Now come to 59th question. Deduction under section 32 AD. Hey, 32 AD. Yes, 32 AD is given to whom? It's depreciation related section. Given to whom? All assessees. Okay, that means corporate as well as non-corporate assessees. So option C is the right answer. It is given to all assessees, corporate as well as non-corporate assessees, but only in the notified areas, like Telangana, West Bengal, Andhra Pradesh, Bihar. These are the 4 states. In that 4 states also, in CBDT will notify some backward areas. In that 4 states, Telangana, West Bengal, Bihar and Andhra Pradesh, these 4 states notified backward areas, 32 AD deduction is given to corporate as well as non-corporate assessees. That means all assessees. How much deduction? 15%. On what? On the actual cost. 15% on the actual cost. Please remember, 15% on the actual cost. It is one-time deduction. Okay. I'll ask you one more question. For 32 AD deduction, please tell me one question, answer. Yes, I am asking to you. Please comment. Okay, what is the question? 32 AD, that 180 days rule, half depreciation, which we do in normal as well as additional, right? Is it applicable? Comment below. The answer is no. It's not applicable. Why? The law specified that half depreciation concept does not apply. So even if the asset is put to use for less than 180 days or more than 180 days, it is irrespective of that 32 AD deduction. 15% is given in the year of purchase, even if it is used for less than 180 days. Come on, we are revising concepts also along with MCQs. Come on, next question, 60th question. We completed 10 questions till now. Great. For the purpose of computation of capital gains, securities transaction tax is not deductible. Okay. When we calculate capital gains tax, securities transaction tax is not deductible. Okay. So what are the options given? They said allowed, form part of the cost. Third option, neither allowed, that means not deducted, and even don't form part of the cost. So it is not included in the cost, nor it is allowed as deduction. Hey, securities transaction tax is not deductible when we calculate capital gains. So option C is the right. Suppose example, you are a trader in a stock exchange. You are regularly buying, selling shares in the stock exchange. Like it is a Carvey company or it is Angel stock broking firm, something which is basically into trading, like Kotak Securities, HDFC Securities. For them, the income is taxable under PGBP. For them, STT is deductible. Suppose you are a businessman engaged in coaching center business, or you are engaged in manufacturing business and you purchase some securities where you paid STT. For you, is it deductible? The answer is no. Only STT is allowed as deduction for whom? Carvey, HDFC, Angel Broking, Kotak Securities. Only for that companies who are into trading in share securities, for them STT is deductible. For all others, not deductible. Clear? Very good. So what is the right answer? Neither allowed as deduction nor form part of cost. C option is right. Come to the 61st question. Very important. What I said. 61st question. Listen carefully. Loss from trading in derivatives. First thing, please remember, derivatives through a recognized stock exchange can be carried forward for. First thing, the question is derivatives a speculative business? If you answer this, then you will be able to understand. This question is relating to set off and carry forward chapter, and can we carry forward this loss from derivatives? If this question is answered, then we will be able to decide. Okay. Now come to the concept. Speculative is taking risk. Derivative is protecting yourself from risk. So can we call derivatives as speculative? It is exactly opposite. It is risk protection. Derivatives is risk protection. Speculation is risk taking for higher returns. So derivatives is an exception to speculative. Exception. It is not speculative. Is it specified business? No. It is not given in the list under 35 AD. Then what it is? It is regular business. So regular business loss, how many years we carry forward? 8 years. So loss from derivatives or loss from forward exchange contracts, loss from future contracts, loss from hedging transactions, all are non-speculative. Hedging, forward, future, derivatives are not speculative, they are regular business. Risk protection is the target. So 8 years we can carry forward the loss. Option A is right answer. Okay. If I ask you, loss from speculative business can be carried forward for 4 years. Speculative 4 years. Okay. Chalo, let's question. 62. What is the 62nd question? Deduction under 80E. E for education here. E for education. How many years you can claim the deduction of loan, interest on such loan? The answer is maximum 8 years. Yes, maximum 8 years. It is not exactly 8 years. It is maximum 8 years. How many years you are paying interest? How many years you are paying interest? Or 8 years, whichever is lower. So what is the right answer? Sorry, whichever is earlier should be the word, right? 8 years is the maximum period. So 8 years or actual interest payment period, whichever is earlier, you will, that many years you will get the deduction. So what is the right answer? Yes, right answer is B. Many a times when we see this type of question, we jump and see, oh, 8 years is given and we'll take D. Please don't be over enthusiastic. MCQ question, those who are super talented students do lot of mistake because of their enthusiasm. Keep calm, focus on each and every word and give answer. That will help you. If you are too nervous, you will forget everything. If you are too anxious, you will take wrong answers and you will fall into the trap of examination. It is to hold your nerves, concentrate and write the focus and give the right answer. Come on, 63rd question. Now they asked dividend. If the company is agricultural, doing agricultural business, like Godrej farming is there, it may be into agricultural business. But the dividend is always non-agricultural income. It is a return on investment. So it is non-agricultural income. 100% it is non-agricultural income. Okay. So what is the right answer? D. Non-agricultural income up to 100%. Totally 100%. Okay. Not up to 100% actually. Okay. So generally in case of tea, people study agricultural 60%, non-agricultural 40%. But it is for company, right? If it is Tata Tea Company, for Tata Tea Company, agricultural 60, non-agricultural 40, it's okay. But for the investor who is receiving dividend, 100% non-agricultural, okay, differentiate. Tata Tea is different and Ganesh investing in Tata Tea is different. So if Ganesh receives dividend, yes, you are right. What is the answer? It is 100% non-agricultural income for Ganesh. For Tata Tea, it is 60-40. Okay. So for Ganesh, the investor who is receiving dividend, non-agricultural income up to 100%. D is the right answer. Come on, next question. 64th. Hey, this is not for you. This is something for final. So we'll not discuss this. Not from your syllabus. 65th question. cash gifts. If you are receiving cash gifts received by HUF. HUF, who is a relative? If you receive gifts from relatives, it is 100% exempt, correct? So even if you receive cash gift or movable property gift or gift of immovable property, if you are receiving from relatives, it is exempt. Now here, for HUF, who is the relative? For HUF, all the members of the family are relative. So if HUF received 75,000 cash gift, it is fully exempt. It is fully exempt. Okay. Treated as income of the HUF, no, wrong answer. The member, it is also wrong. As income of none, as it is exempt. So what is the right answer? C is the right answer. Because if you receive gift from relative, it is fully exempt. And for HUF, all the members are relative. So what is the income? Income is none, because gift from relative is exempt. C is the right answer. Okay. I'll tell you one thing. Gift topic is very important from MCQ perspective. Prepare thoroughly. Come to the next question. The following is taxable under the head salaries. If you receive gifts from your employer, it is taxable under the head salary. Absolutely right. You are also thinking in the right direction. Option A is the right. Gift received by employee from employer is taxable under the head salary. Here also you should remember that if it is cash gift, fully taxable. If it is cash gift, fully taxable. If it is a gift of movable property, if your employer gives you a gift of movable property, up to 5,000 it is exempt. More than 5,000 it is taxable. Suppose example, your employer give 8,000 as cash gift. Tell me what is taxable. Is 8,000 taxable or 5,000 taxable? Sorry, 3,000 taxable. Cash gift, 8,000 entirely taxable. Very good. Now let's come on, understand. If a movable property is given as gift, suppose he gave you some silver utensil or silver ring or silver necklace as gift worth 8,000, then 5,000 is exempt, right? So 3,000 is taxable. Very good. Let's go to the next question. One more thing I'll ask you before go to the next question. If you receive gift from your client or from your supplier, taxable under PGBP. If gift is not taxable under salary or PGBP, it is taxable under other sources. Come on, 67th question. Maximum amount which is not chargeable to tax in case of a non-resident very senior citizen. Non-resident, we don't check the age, right? Basic exemption limit is 2,50,000 only, right? So what is the maximum amount not chargeable to tax? 2,50,000. Non-resident, we don't check he is a senior citizen or super senior citizen. His age may be 100, 200, 500, 1,000 years, but only 2,50,000 exemption is given if he is a non-resident individual. 68th question. A partnership firm will become resident if control and management is fully in India or partly from India. So what is the right answer? Yes, for partnership we check control and management. If it is fully in India, it is a resident. If it is partly in India, it is a resident. So what is the best fit? B option is the best fit, right? The control and management is totally or partially in India. B option correct. Come to the 69th question. Transport allowance in case of a disabled person 3,200 is given as deduction. Up to 3,200 is exempt, right? Per month, right? So C is the right answer. For normal people, transport allowance from office to home, no exemption, fully taxable. Only for disabled, 3,200 per month is given as deduction. Good. Now come to the 70th question. The religious trust. This is final question, so we'll skip. 71st question. Income from farmland. Farmland is also agriculture. Farmland is also agriculture. Farmhouse outside India, they said. Agricultural income is exempt under section 10 subsection 1. And one of the conditions for exemption is that the agricultural income should be from a place in India. But is it within a place in India? The answer is no. So we don't consider it as agricultural income. It is not agricultural income because we call it as agricultural income. When we check the definition of agricultural income, we'll call it as agricultural income only if it is in India. So it is a non-agricultural income. C answer is right. Correct. Let's zoom. 72nd question. While calculating TDS, surcharge also considered if the payee is. Sometimes the questions are drafted well, but the answers options are not properly given. Now I will tell you the right provision and what should be the right answer. Generally, under section 192, TDS for salary. Under section 195, TDS on non-resident and foreign companies. In these three cases, surcharge is considered along with the rate of TDS. Okay, in case of salary under 192, in case of non-resident and foreign company in 195 section, TDS rate plus surcharge is considered. Even health and education says is considered. Now, what is right answer? Option A is also right. Option B is also right. Both are right. Now, options are wrongly drafted. What can we do? Nothing. But know the law properly. In case of salary under 192, in case of non-resident and in case of foreign companies under 195, TDS rate plus surcharge plus health and education cess will become the rate of TDS finally. Okay. So all three cases we have to remember. Now finally when we go to the examinations, if this type of question comes, faulty questions comes, if they give such questions, they will award marks to you even if your answer is right or wrong. So don't worry, if this type of questions come in the exam, what will happen? Mostly examinations, they don't give such faulty questions. They will cross check and give the right questions only. Don't worry about it. Okay. Come to the 73rd question. When the shares are held in unlisted company, it is treated as long-term capital asset. Hey, if it is listed company, 12 months is the period considered. If it is unlisted company, 24 months is the period considered. If you study this capital gains chapter, you will find it. Okay, come on. So what is the right answer? Unlisted company shares, 24 months period is considered, and that is right answer. If it is listed, then we will consider 12 months. Okay, we discussed about shares. So when the shares, so in the question they asked shares, so listed company 12 months, unlisted company 24 months is considered. So what is the right answer? It is unlisted company shares, right? Right. That's why 24D option is right. 73 complete. 74 will go to. Personal effect do not cover. Don't jump to conclusions. Read carefully. Personal effect do not cover. Do not cover. So the list given, what is not covered? Hey, Jewelry may be a personal effect, but it is an exception. Immovable property is not a personal effect as per the definition. Drawings being a personal effect covered under exceptions of personal effect. So neither jewelry nor immovable property nor drawings is a personal effect. So all the above is the right answer. Personal effect don't include any of the three. All the above was the right answer. 75th question. TDS on interest on securities is covered under section. On securities, if TDS is covered, which section? 193. TDS on securities 193. Sometimes these MCQ type of questions, the problem is they may ask sections. So whatever you feel important sections, please make a note of it and try to remember that sections also. They may ask, it's CMA Institute. So remember at least as much as possible section numbers also. So TDS on interest on securities is covered in which section? Section 193. So here we conclude part 3 of our lecture. Hope you are enjoying the lectures. We'll upload the part 4 sooner. And income tax analysis also we are uploading. What important sections, what important topics which you have to consider for exam, and what are the things which you should look after on the day of examination. We are uploading a lecture on it. So subscribe to the channel, connect to us, and do comment below how you felt about the lectures. Right? Take care, good day, and we'll meet in the next video.